If you've been struggling to identify the daily bias, then this video is for you. I'll show you the simplest way ever to determine the daily bias in 1 second, literally 1 second. And I'll show you how to trade based on that one method, where to enter, where to avoid entering, and some examples. If anyone need a one-on-one mentorship, check out the description. This is Molham and let's get into it. Now I really want you to think with me here. We are in the daily time frame, GBP USD, pound dollar. What do you see here? What do you notice when any candle close either bearish or bullish? What happens on the next candle? Let's see here for example, okay? So right here, what happens here? When this candle closed bearish, then the next candle is bearish. Next candle is bearish. Next candle is bearish. Sometimes there's some noise, but a lot of time the probability of a candle closing bearish after a candle closing bearish is too high. You see right here, bearish, 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 bearish. And if we go here, for example, bullish candle closing, bullish candle, bullish candle, and the same thing here, bullish candle, bullish candle, bullish candle. We're not gonna trade it blindly like this, but I'm gonna show you what are we looking at exactly. So all of what we are focusing on is the color of the candle. It's literally gonna take 1 second from you, but let's go and dive in more. So let's take a look at this. Let's assume that this is a daily candle right here. Now, this is a bullish candle. What are we expecting to happen next? Another bullish candle. That's the expectation. But how do we enter, or where do we look for buy positions, from where, at what range? So if we apply premium and discount on this candle right here, in this candle, this is our range, this is our discount range, and this is our premium range, 50% right here, above and below. So what do we look for on the daily time frame? Closes bullish, for example. All of what I'm expecting now is for price to retraces down into the 50% or below the 50%. It can be something like this. It was lower and then going up. We target any liquidity level on the way, and the ultimate target is the previous daily high. On this case, when we're going bullish, we target the previous daily high. So that's all what we are doing. All of what we are looking for is a trade or a setup in the discount range right here below the 50% of the daily candle. So if I ask you now, if price does this, goes up and then goes this way and comes above the previous daily high, are you really looking for a short position here if you have a setup? No. Why? Because you would be stopped out a lot of times and then price will come down into the 50% and goes up. So the bias in this case, since this candle is closing bullish, to go up. Now another scenario can happen here. Instead of price taking the previous daily high, it can actually, instead of only coming to the 50%, it can come to the previous daily low. So actually this can happen. Price coming lower, no setup here, or price actually comes here even before the kill zones, then goes lower, and then we have this sweep and then change of character. We can actually look for a setup right here, an entry right here. So let's say we have a fair value gap. That's our entry. It should be in the kill zones. Now, when do we think about 50% retracement, and when do we think about previous daily high or low taken? So in this case, previous daily low. When do we think of this? Most of the time when this candle on the daily time frame is kind of small. So let's say this is small candle here. Most likely price will take the previous daily high or low. On the other hand, if we have a candle like this, we're not really expecting price. If price wants to go up, then we're not expecting price to go all the way down to take a liquidity from here and then goes up. Why? Because it's just too far, a lot of change of characters inside, and it's not really logical for price to go all the way down there if it wants to continue up. But on the way after this expansion candle, for example, another small candle can be created here and then takes the previous daily low. Now let's think about this. If we have this scenario here, this is a daily candle, all of those are daily candles, and price has been expanding up, very big candles, and then a small candle is created here. All of those candles are bullish candles. Now we all know that before price continue to the upside, it needs to take some liquidity and then continue upside. And before price expanding up more and more, it needs to come back, take some liquidity, and then continue going up. Why? Because the liquidity is the fuel. So we are always expecting price to come, take some liquidity, and then goes to that same direction. In this case, what do we see here? We see that on the daily time frame, we have a fair value gap here. So let's put it on another color like this. We have a fair value gap here. And what do we have here? A small candle that has a previous daily low here. So in this case, this can be our liquidity, and most likely price is not going to respect the 50% of this candle. However, price will start to go lower here and is going to take the previous daily low inside of the daily fair value gap and then started to go up. So that's the scenario we're expecting price to take the previous daily low more than price just coming to the 50%, because this fair value gap on the daily time frame needs to be filled, and there is no way for this fair value gap to be filled except price taking the previous daily low. So this is the second scenario where we expect that price takes the previous daily low or high other than respecting the 50%. So let's consider the price action now. Price has been closing bearish here, bearish candle, and you see price going lower, lower, and now closing bullish. So we have a bullish candle, even though it's not that, very bullish candle, but the color is bullish. Now taking a look at this, since it's bullish, then our bias is bullish. It doesn't even take a second to think about, right? Bullish, then bias is bullish. That's it. I'm gonna go and apply my gam box or premium and discount range, and the settings are here. So let me click on this twice. Here are the settings of the gam box, 0, 0.5, and 1. And those are the settings. That's it. So what I'm gonna do, I'm gonna drag it from here all the way to the top of the candle. So we have the high and the low of the candle marked here, and it shows us the 50% of a candle. So what are we gonna do now? We can actually go to the 5 minutes, for example, and see how price does, and if it respects the 50% level, in this case on the kill zone. So now we are in the 5 minutes. This is the high of the daily candle, the low of the daily candle, and a new daily candle starts in 5 minutes. So let's see what's gonna happen now. I'm gonna only trade, and so this is the Asian session. Price goes up. So nothing so far. And the Linda session is also up. And you see anyone who entered a trade here, he's losing. Anyone who take a trade here also losing because there is another sweep. And now price is starting to go down. So what is our range? This is our range. The discount range, this is where we look for a setup and then we buy, targeting any liquidity and then expecting the previous daily high to be taken. So still price is not okay. Price comes to the 50%, and you see there is a respect at this level, and price looks like it wants to go lower. There is no setup here, nothing so far, and price actually takes the previous daily low, and you see it doesn't close below it. So that's a good thing. Now this is why we did not take the previous daily high sweep. We want to take the previous daily low sweep. Why? Because we're bullish. When you are bullish, you're waiting for the previous daily low to be taken. So that's a potential setup here. There is no change of character. Maybe in the lower time frame, yes, but not here. Price sweeps again. And there is, okay, that's a very big candle. Very big candle. But we did not have an entry here unless you entered from this fair value gap for some reason. But what I'm seeing here is this breaker block. And if you've not watched my breaker block video, then make sure to do so. This is a breaker block. This is a bullish breaker block. and we can see price actually closed above it and started to go up. An entry from here can be, at this level, then stop loss somewhere in here, and then going up, targeting, like, let's say 2.5 or whatever, or this high. But the thing is that we are out of the kill zone, so we're not taking this trade, but we see how price actually respect the bias. You're only going long here, and you see the move right here, very big move, which means you are with the bias, with the higher time frame bias, with the higher time frame direction, and price actually comes to the breaker block and started to go up, and there you go. So even if you enter this after the kill zone, it's going to be a winning trade. No drawdown, but you should always stick to your rules. So if you're not taking a trade out of the kill zone, then do not take this trade. Now we continue to the daily time frame, and what do we see here? You see price sweep the liquidity and started to go up. So very big expansion candle here. What I can do is apply the same gap box here again at this candle and do the same. So we're going to go to the 5 minutes, and let's remove this and wait for the new candle to form. So it's going to take some time. But even here, you see how price is respecting the 50% of the candle, right? I'm going to go just 15 minutes to make it faster. And this is the Asian session. Back to 5 minutes here. See what's happening. Now, this is our range. You see how it's very clear for you that you're bullish and your trading zone is right here. This is your trading zone below this level. You don't go short above, no short here. If you want to be with the bias, with the higher time frame bias, then you should be trading here and going up only. So let's see. This is the lender session, and price goes up. So still not to the 50%, somehow close to the 50%, but not too close. But what I see here is this. We had this liquidity level taken, right? And then what do we have below? We have a fair value gap. This is what I really like. You see, price respecting the fair value gap after a sweep. So if it's kind of close to the 50%, you can take it. But if you want to have very mechanical and strict rules, then apply this. Just below it, you take a trade. But I can see that this one kind of a nice trade. Why? Because you see how price first respect this fair value gap, and if we zoom in, what do we see? We had another fair value gap here, and it's also respected. What do we expect when a fair value gap, or when price respect a fair value gap and create another fair value gap? We anticipate price respecting this fair value gap, and this is what happens here. Price respect this fair value gap. Now we can see that this leg created another fair value gap, and it's this one, and we can see that price actually respect this fair value gap and started to go up. Now what do we see here? The leg that respect this fair value gap created another fair value gap, and it's this one. And what do we see? Price actually respecting this fair value gap here. And what happens here? You can actually expect it. We have this fair value gap. It's respected here, but then respected again, and hopefully it's respected. But you see, and price goes up. So no trade if you are looking below the 50%, but you could have seen this price taking the Asian low kind of close to the 50%, but there is this clear liquidity and this clear fair value gap here. So I'm not sure if there is a trade. We're going to wait for New York to see what's happening here. And New York goes up. So price doesn't come back to the 50% in this case. Now back to the daily chart. This is the new candle right here, and it's bullish. So what are we expecting? Bullish bias, right? So I'm gonna go and apply my gam box again, premium discount. Now we go to the 5 minutes, and let's play this. So we have the daily high here, and we're gonna go wait for the next kill zone. Right, so I'm just gonna go 15 minutes for now until the Asian high, and we can see that's now we are on Linden. We're not in discount still, so I'm gonna wait for price to go there, and you can see price coming there. Now this is our trading zone, right? So if we find a long position here, then we're gonna take it. So there is change of character if you take it here, then maybe price respecting this fair value gap, bullish fair value gap, and price keep going lower. But there is some respect for this fair value gap. See, there is no fair value gap below it. So you entered here 50%, then stop loss, kind of, for example, just below this candle, then you were able to catch, you know, 3R, 3.3, but then price stopped out, right? So it just show you that at this point you can actually look for long positions, but then price keep going lower, and we can actually look for other setups. But the New York kill zone is done here, so we did not find any entry except this one. Back to the daily time frame, and what do we see here? So price was going up, we traded this, there was no valid trade here, and then price closed bearish. What does that mean? Now our bias has changed from bullish to bearish, and I'm gonna go grab my premium and discount, apply it here, and I'm gonna be looking for short now. So I'm gonna expect price to go up into this trading range, and we're gonna look for shorts down there. So 15 minutes. Let's take a look at this. Now let's skip until London or New York. And we see London is here. So okay. Now London take the previous daily low. Do we enter from here? No. No entry here. Right? Now you can use any time frame that you would like to use. But for this example, I'm gonna go to the 3 minutes just to show you that we can use multiple time frames here. So price still not in the 50%. Not there yet. And almost there. So now price is approaching there. New York kill zone. Okay, started to go lower. Okay. So price is above 50% now. This is our trading range. Now what do we see here? So if we move to the left, looks like there is this sweep of a high. You see this sweep right here, and then price started to go lower. So sweep with a wick, price started to go lower, and we have a fair value gap. Is this fair value gap respected or no? It is respected actually, but there is no other fair value gap to enter from, and there is no fair value gap to enter from. This is unfortunate. But what do we have here? We have fair value gap here, and let's see. So we have a sweep here. So the order flow is bearish, right? We have a sweep, and we have a potential. Here's market structure shift and a breaker block at this point. So let's keep an eye at this point. And there you go. So price closed below it. And what is this? So this is first fair value gap here, breaker block here, which means that we have a breaker and we have an inverse fair value gap. So if we have an entry at the inverse fair value gap, and let me put it on another color, so bearish, it's a bearish. So if we enter from the inverse fair value gap or the breaker, whatever, and then have a stop loss, above this, because there is still a potential for price to go into this fair value gap. But if price wants to go lower, faster, then it's gonna react from the inverse fair value gap. So let's enter from the inverse fair value gap and let's go for, so the previous daily low it's not that much. We're gonna go 3 to 1, for example. Let's see if it's gonna work. And there you go. So price actually come into the inverse fair value gap, started to go lower, and we had a very small fair value gap here. It was respected. Price goes lower, we have another fair value gap. Most likely it will be respected, and this was a winning trade. So this is where we look for shorts. Even though, price went here, but there was no setup except, very close to the 50%. It's below 50%, but we know and we got a confirmation slightly above the 50%. We can still enter here. Why? Because the order flow is very clear that it's bearish now and price is coming lower, mitigating every PD array and every fair value gap. So we're not expecting price to go up again, right? Because the order flow and the mitigation is very clear. So we can actually catch a trade here and continue to go lower. And I believe price went more lower, right? So yeah, it keeps going lower. And this is what we see here. We saw this red candle, and what did we anticipate? Another bearish candle. And look at this huge candle, huge candle. And if I grab my gam box here, this is where price retraced to, slightly above 50% and went lower. Now, something that I wanted to point here, this is the thing. We covered this in the beginning of the video, and I showed you that sometime you see right here, and I told you that as price going lower, it needs to take some liquidity, especially if it was going lower like in a very aggressive way, then it needs to take some liquidity and continue lower, right? This is what's happening here. What do we see? Bearish candle, which means that the next one most likely to be bearish, right? We have this bearish candle after, and was price at the 50%? Yes. So you see, this is the candle, price come to the 50%. This is the manipulation of the candle, right? Price comes here and then goes lower as distribution. Now, the same thing here. This was a very big candle. Price doesn't come to the 50%. And we have this small candle compared to those two. This is a small candle. And what do we have above this candle? Fair value gap. And what did I say when price has been going lower aggressively? And then we have a small candle and two big candles, very big expansion candles. What do we expect? We expect this. Price to take the previous daily high into the fair value gap and goes lower. Let me show you what's going to happen here. And I could see it very clearly. Daily fair value gaps are very strong. Why? Because fair value gap and a huge liquidity, previous day high liquidity. So I'm going to look at this. Let's go to the 15 minutes and let me mark this as a liquidity level. We're going to go to 15 minutes and let's watch here. This is the daily high right here. This is the daily high and it was London high. Now we're going. I don't really care about the low of the candle. This was the low of the candle, which was in New York, but I'm not really interested. Why? Because my range is above, right? Now I believe like if I grab this from here to here, let me just grab it like this. This is my range. Above 50% we trade. So let's wait for price to give me a setup here and I'm gonna enter, but most likely I'm looking for price to fill the daily fair value gap by sweeping the previous daily high. There is no way for price to fill this fair value gap without sweeping the previous daily high. So that's why I'm very confident about this. And you see, price actually at 2 a.m. So at the start of the London kill zone, price sweeps the previous daily high. So going lower. So let's see if there is a displacement. Actually, my change of character or market structure shift is going to be at this level. So this is my market structure shift. And then my draw on liquidity is this previous New York session low, right? And what is it also? It's a previous daily low. So this is my draw on liquidity, but for sure I'll be taking some partials in the way, especially at this level. And why? Because this level has a fair value gap below it and a liquidity. So most likely, price can just come here, take this level, and then goes up. So let's wait for a market structure shift if there is one. And there you go. So there is a market structure shift here. In our trading zone, this is where we trade. So no fair value gap here. Extreme fair value gap is here. So this is where we can enter, right? At the 50% of fair value gap, for example. If you are trying to catch all trades, then you can enter at the breaker. But for this time, because the breaker is too far away from the fair value gap, so I'm going to actually enter from the fair value gap. Stop loss just, above here or above this candle. Now let's put it here and then targeting this level right here. 2.5. and then I can actually extend it to the drawn liquidity. So price is coming. Okay, so you see how price reacted first from the breaker block and then went to the 50% of a fair value gap and slightly up and then started to go lower right there. And here's the New York kill zone. Price actually entered the same level or our entry price again and actually hit the stop loss. So this was a losing trade, even though I was thinking that price is gonna take this, but actually price reacted from this after taking this liquidity, goes again into the previous daily high, and now we're starting to go lower. So that's why I said we gotta take some partials. So I said I think the Asian low is the first target, and then extend it more into this level and the previous daily low. But in this case, it's unfortunate that it takes this level here, which is the previous London high, and then it goes lower. But you see how this is our trading zone. This is where we find the right trade opportunity. Now, this is the easiest way ever to find your bias. However, if you want to make it even better, you can apply the drawn liquidity concepts. I have a video about it. You need to apply the top-down analysis, and I also have a video about it. With this, you'll be ahead of the game. You won't need anything actually. But this concept and this method is the easiest ever. It doesn't take any time from you, and you can actually, when you see the color of the candle, go ahead and trade immediately. Hopefully you guys like this video. Make sure to like, subscribe, and leave a comment. Also join the Discord, as I do a lot of question and answer sessions there, as well as seminars and educational stuff. This is Mulham, and I'll see you in the next video.